So good morning, active traders, and welcome to our Trading Week Ahead live broadcast here on Saturday, October the 2nd, 2021. I'm Ken Calhoun, president of DayTradingUniversity.com, which is coming back, by the way. You may want to bookmark this site. I just got a placeholder header graphic in place now, but TradeMastery.com as well, and look forward to working with you. Just a reminder before we get started, I do have an annual access sale on the live room. Just $9.97. I haven't offered this price with all these bonuses since back in June. And we had a really big turnout. So if you want to work with me for a whole year, there's no upsells for other courses. There's no need to buy scanners or expensive software or any of that kind of junk like my competitors charge. Instead, you get to work with me, a professional, for an entire year for just $9.97. No upsells, no extras, and we'll be working together. The sale's on for the entire next week, from now until a week from Sunday. So you can take advantage of that and to try out the room for free all next week, at least in the afternoon, not the morning part, but the 3:30 to 4 in the afternoon, where we'll go over the day's winning charts and the alerts and answer questions. And I'll be doing some live trades, I'm sure. You can go to actionclose.com or trademastery.com/actionclose. ACTIONCLOSE, and you can join me from 3:30 to 4 each day next week to also take a look at the live room service and how I moderate the types of charts we focus on trading and everything else. So look forward to working with you. Let's go ahead and get underway with today's session. Here, we'll start off with our S&P. Broad market bounced yesterday, obviously, 450 point bounce in the Dow. But we are still in a technical downtrend. So I would not be all excitedly buying the dip here just yet. This is probably a bounce. It may be a dead cat bounce day yesterday. Nobody knows, right? The technical signals I'm going to look at right now are as always, the 50, the 100, and the 200 simple moving average line. And notice, please, we have not broken down under the 200 SMA since way back almost a year ago, back in late October. So it's been a year since we broke the 100, and we did so on a couple of times here recently. So we're still underwater. I would not be looking for long swing trades until a minimum of a recovery of the 50 simple moving average, and you can see that's at 44.50 on the S&P. So I would not be swing trading stocks. Maybe an exception might be energy, that's been hot lately, and oil. So oil, energy stocks have been bouncing lately. But I wouldn't be doing aggressive. I'm not going to put on any significant size unless we get over that 44.50 and stay above that for a couple of days. And preferably we want to wait for the 45.50 for an all-time high. Right now, we're still in a downtrending channel, so we're still in a bearish market. Remember, don't get misled by an occasional bounce day in a very strong downtrend. Any professional technical trader will tell you the same thing. So just like uptrends are punctuated by brief pullbacks, downtrends are punctuated by brief bounces. Yesterday was an aberrant bounce, but we're still in a technical downtrend. If we take a look at the VIX, you can see it's still wildly bearish over the 20 up at 21 was the close on the VIX yesterday, 21.15. So as long as the VIX stays over 20, we want to have a selling short bias in the stock market. Ask any other Wall Street trader. We'll all tell you the same thing. VIX over 20 is a sell signal. Now, if the VIX drops under the 20 and stays under there for a couple of days, then we may get some buyers back. But if the VIX continues to climb up as it has the last couple, 3 weeks, we continue to have a bearish bias in the market, and you want to play your trades accordingly, all right? So let's take a look at a few swing trading charts, and then we'll flip into our intraday charts. What I want to ask for is any day trading, or let's see, any day trading charts that you may want to take a quick peek at. Now, many of the charts like this Navi, it had been good until it wasn't. Your sell signal is always going to be scale out of half of, if you're a position trader or a longer term swing trader, you're holding at least a few weeks, you always want to scale out of this pattern on a loss of the 50 simple moving average. And the reason I highlighted this chart was it was great until it wasn't. And so when the market pulls that, or when the market sells off and the stock that you're trading or the ETF pulls back under a key support level, like a 50 simple moving average, you need to at least sell half of the position. That's what I do. And if you lose 100, you should be out cash, right? So if you've been riding this thing on the way up, like we've been calling, the first sign of trouble was a loss of the 50 SMA. recovery bounce would be right back over the 100, right? So you may want to scale back in over the 21. And not trading advice or recommendations, for educational use only. Next up, let's take a look at this AVTR chart. Now this guy is just barely hanging on to the 50 SMA. Now I would not sell it unless it gets under the 40 and stays under the 40. I'd scale back in over the 45, but it's a really strong directional uptrend. Another chart here that we looked at, an emerging breakout here. Now this one, unlike the previous two examples, this one is CMRE, Charlie Mike Romeo. I won't say the E word because my Amazon device will light up, but CMRE, it's in a good uptrend and it's above the 50 all three moving average line. So it's kind of a pennant pattern or flag pattern. It ran up, it's been pulling back and consolidating. I wouldn't touch this with a 10-foot pull unless it gets over 17. But this one is poised for a breakout, whereas the other two already did their breakouts and they're in a reversal pattern. This one's still in a continuity or continuation pattern. So CMRE looks interesting. METC is a good example of a momentum breakout, and you can see from this chart it's got a really good swoop to the upside. Now I'm a big fan of trading over to wait until we trade over whole numbers, and you can see in this chart clearly 15 is the nearest whole number. So if it climbs up over 15 and pokes its head up, it'll probably be a false breakout. But if it does a second time, it may be a good continuation play over say 1520. So keep an eye on this, the METC chart. And finally, we'll look at a couple of commodity plays. ConocoPhillips, an oil play. All things oil have been bouncing lately, right? I don't know who else trades things like Marathon or Occidental Petroleum. OXY has been good for us in the live room last week, OXY. COP is a good example, one that did a really good 1 week breakout this past week. While the market was dropping and trying to make up its mind, oil has been really strong. And so COP is one that's right up under a 70 decade value and makes sense to trade over 70 on a continuity play. An ETF way to play oil to the upside is with UCO and USO for that matter. But UCO is a good uptrend. It's kind of pricey up here at 85 bucks a share, but it's a continuous move, which is good. Now for the contrarians in the house, my #1 favorite pick for a reversal, and I teach traders exactly how to scale in, where and how to trade things like this and other instruments for swing trades in the live trading room, KOLD. It's the how to short natural gas. Now it's still in a downtrend. We had a little dead cat bounce near the 10 last week before last. It's now consolidating under the 8. But look at the range. What I want you to look at is the trading range on this instrument. Just a few short months ago, it had been up at 30 a share. Now it's down at 8. The more important thing to look at is what? What green technical indicator is jumping out of the cold chart? Anybody? What tells you that this may well be a really good pivot play? You've seen how good my alerts have worked out for the last 20 years. KOLD, I'm in small shares. I'm going to scale in significantly if it breaks over the 10. But the main green indicator is these large green volume bars with 1 year high volume over 17 million shares just back on Tuesday. Anyway, whenever you see year high, it's a quick rider downer. I don't have mine. I do have my Mont Blanc. Anyway, rider downer. If something's been dropping, don't play a pivot unless it has 1 year high green volume, which means you got a blend of both short squeeze, shorts covering. Whoever been short, congratulations, it made a boatload of money. But now we've got a lot of green covering volume plus speculative, like us, speculative balance long players. So whenever you see a short squeeze, and that's when you may have heard that with some of the meme stocks like GameStop and whatnot. Whenever you have a big epic drop that's a multiple of price action that has a large green 1 year high, it has to be 1 year high green volume bar at the bottom, that's a good buy signal for that instrument for a potential pivot. You can see that certainly illustrates that, right? We've got a really good range, natural gas inverse from 60 all the way down to 8. May go down to 2 or 3. There's no guarantee we're at a bottom yet, but this is a good example of the kind of chart that I'm trading for potential pivot to the upside. I'm just doing small shares. I trade under 100, 200 shares until it gets over the 10, and then I did martingale in. One of the techniques that you'll learn about, by the way, in the live room is not only for swing trades, but for day trades, is how to use very professional position sizing and scaling. Unlike anything anyone else teaches, because I'm a real trader, unlike most of my competitors who just talk about charts, I really trade daily. So I got to make the money work. So I got to make my numbers work. So what I teach traders is how to use position sizing to add to your winning trades, and also how to subtract out of your winning trades without that pesky fear of missing out. What if I sell and then it runs up without me? How many of you, show of hands, struggle with that like I do on a daily basis? You fear that I'm going to sell it right now, right near the exact bottom, and then it's going to run up without me. Anybody share that concern? After that happens to you a few hundred times, you realize it's a valid concern. So what's the workaround? What's the fix? The fix is don't sell it all. You may want to sell half of it or 2/3 of it or 1/3 of it or whatever, leg in and leg out. I know Jim Cramer had mentioned that too in one of his broadcasts about scaling in increments, and that's very professional and it's very correct. So that way you still keep the trade alive in case it bounces, but you lower your risk on the trade in case it keeps going down. Now, if it does bounce, you can always get back in. So scaling in and out of your trades while doing it in a very simple, easy to understand manner. I teach a whole number strategy where we use whole numbers for intraday trades, and every $2 or so for swing trades is one of the techniques you'll learn about with live real money trade examples I do in the live room. So do be sure to register for that. I do have it on sale for the next week only. There's no additional things to buy. You don't have to buy any scanners. There's no overpriced $2,000 courses to buy or anything like my competitors do. You get my best training every 5 days a week in the live room from Monday through Friday, from 9 to 10:30 minimum, and I'm usually there at 8:30, and I usually stay till 11 or later. So anyway, do join my live room. It's on sale for the next week only at trademastery.com/live. Back to our scheduled program here. Let's take a look at some intraday charts now. By the way, I'd love to hear any examples of day trading charts you guys would like me to take a look at. Meme stock AMC was really hot on Thursday, not so much on Friday. If you take a look at the AMC chart, did a really nice big multi-point run all the way from a base around 34 up to a high of 41.80 or so, right under the 42. Big run in the afternoon. Now this illustrates one of the many techniques that you may have seen me cover either in my Money Show events or in my award-winning technical analysis of stocks and commodities magazine articles, where you have alternating wide range versus narrow range days. In the candlestick chart, you'll often see that. Go look at your favorite chart on a daily candlestick chart, and you'll often see that pattern where you've got a wide range, really tall candle, kind of like a gap day, followed by a little itty bitty day, right? After a big day, you almost always get a much smaller day. Big day, small day, big day, small day, big day, small day. Aha, it pops out. And as a pattern day trader and a pattern swing trader for that matter too, what we're looking for are repetitive patterns that we can profit from, potentially. So, kind of like a binary light switch. I don't have a light switch handy, but on, off, on, off, on, off again. So you get a big range day, get a narrow range day. So Monday is likely to be, or Tuesday at the latest, but likely Monday may be a big up or a down day for AMC. And we fully expected that. So this is one way to help you avoid getting faked out or trading incorrectly, is just because yesterday was a big range day does not mean the current day is going to be anything like it. In fact, usually you expect the opposite. And that's one of the advanced tips that I got from one of my market maker clients years ago, was the compression, expansion, compression, expansion, contraction. You get a big day, narrow day. Usually a medium or another large. You're not going to get a big day like this Monday, but up to 50%, maybe mean. This is like a mean reversion pattern, right? It went up slightly above the average, but that's the pattern you expect. So what that means to you as a trader is, do not be overly enthusiastic about trading after a big day. In fact, you should not trade much at all after a really big range day, but you do keep it on the radar, on your watch list, on your portfolio list for a play day 2 or day 3 after the initial big day. Just like a gap, same exact thing. I don't know how many of you trade gaps like I do, but usually the day after gap is a non-event, maybe day 2 or 3 after the gap that's tradable. So that's how you don't miss out on the follow-on play and don't overtrade too soon. That's our tip of the week. Also showing relative strength in addition to oil has been Bitcoin and stocks like Marathon, M-A-R-A, or the Coinbase or Riot. The Bitcoin-related stocks have been strong. Now, yesterday was just a gap and trap, right? And this highlights a pattern that's in my top 10 day trading chart patterns ebook, which is a gap fill pivot pattern. This one didn't have a whole lot of range on the fill on the bounce yesterday, but it illustrates the pattern. When you have a big gap up or moderate gap up, that just a gap and trap. The gaps up, traps, goes back down. They'll almost always pivot off the previous day's high, and that's the trade. You don't chase a gap up. You let the gap do what it's going to do, unless it's a small gap. If it's a small gap, a gap and continuation play, those are my favorites. But if it's a moderately large gap, it'll usually fill, and so you don't want to trade the high of a large gap. What constitutes a large or a small gap, you may ask? Well, I teach how to do that in the live trading rooms with daily examples. So anyway, the pattern here is to buy the bounce. Once it gaps, fills down to the previous day's high, and then starts to go up again, that's your entry, right? And you put a hard stop right under the support. So if you're to buy, say, 32.7, 32.8, your stop would be right here at 32.2. And they ran up a bit, so a pretty good chart. I made some money trading Carnival earlier this week, not yesterday or the day before. I think it was Tuesday or Wednesday. But CCL is a really good pattern, a meme stock, right? Carnival, just like AMC and GameStop and others. You can see Carnival had a really good swoop to the upside yesterday, going from a pre-market 25 in market all the way up to the 26.5. And the last one to look at is BTBT. I called the long on a pivot here for traders on Thursday, and it worked out really good. Now this illustrates yet another one of my favorite patterns. Was anyone following Bed Bath & Beyond? I nailed the call on that too. It did a big pivot. One of my very smart traders, Roger, had mentioned Bed Bath & Beyond. We'll look at that one in a minute, but dun, 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 dun. Anyway, the pattern you want to look at for these kind of charts is we have a near vertical drop. 45-degree angle drop is strong, and you don't want to play the bounce in that. But a straight down drop, especially if it's over a point or so, this thing dropped from 8 to 6 and change. I nailed the call for my members to go long on the pivot here because that was a good example of a weak drop. Just like a spike up, you don't want to chase because it'll fade back down at least to the midpoint at any second. So don't want to chase something that goes straight up. You do, however, want to look for things that go straight down and start to bounce if the drop is far enough and the angle is sharp enough, like a 90-degree or close to angle. That's a weak breakdown and very likely to recover. That makes for really good trade opportunities because your risk is minimal. If you buy, say, the 640 or so and put a hard stop at 620, that's a really good upside run around all the way to 7 and then some. So that's a good example of the kind of pivots you want to look for. You don't want to trade a weak pivot. You want a strong sell-off that starts to get a volume spike, right? Get large volume, makes you a good long. And our last chart of the day we're going to look at is Bed Bath & Beyond. An iconic drop on Thursday. I called the long, and I was trading it from 1620. But I got shaken out, though. I'm not always, by far, I wish I was right all the time, but I'm not. I bought 1620, but I think I was using 1580 as a hard stop, and I got shaken out. But I called it for my members, and it worked out good. Anyway, Bed Bath & Beyond right over the whole number because it stalled and went sideways for a long time pre-market. If you were trading BBBY on Thursday, remember, it was going sideways at the 16 for a long time. That's why I called the long for members at 1620, and it ended up running on the day all the way up to 18. So a nice almost $2 run off the pivot call. So, and again, this illustrates that same exact pattern. Big range day on Thursday, but what did it do yesterday? Nothing, right? Just went sideways. Big range day followed by narrow range day. Just like AMC on the other side. Big range day, narrow range day. Those kind of tricks of the trade are exactly what I teach traders in the live room, because I've been doing this for over 2 decades full time. So I've learned. I've made all the mistakes in the book and then some. And I've made a lot of wins too. And I've learned the difference between the two. And that delta, or that difference, is why traders trust me. I'm very honest about things. I don't make phony YouTube videos claiming to make $100,000 a day. I mean, seriously, if somebody made $100,000 in a day day trading, why would they go through the hard work of running a business, teaching and training and charging thousands of dollars for courses? They wouldn't. So if it looks too good to be true, it is. I'm very honest. For me, a good day is $800 or $1,000. A bad day is down maybe $300-400. It's a 2-to-1 risk reward ratio. So I trade small and I trade frequently, and I think that's the right way to. You throw a lot of well-placed darts at the market with really tight stops, so the cost of being wrong. My day trading stop loss cost is average is under $50. I may do a couple dozen trades a day, and if I do a win, maybe it's 70, 120, 180, 200, whatever. The goal is to make your stop loss cost next to nothing, inconceivably small. You can always tell a good trader by the size of their stops. Anybody who's making thousands of dollars in stop losses is a horrible trader and a bad person to learn from. Anyone who keeps stop loss costs under $100 or so, I think is the right way to learn. And so many thousands have agreed with me. So I'd appreciate it if you would too. So anyhow, let's take a look. Again, the live room annual access sale is just $9.97. No back ends, no upsells, no. Oh, and by the way, you've also got to buy a scanner, and you've got to buy a $2,000 course, and you got to buy this, that. No, I'm very honest. That's why I've been trusted for 2 decades. In fact, I like to over deliver. So for just $9.97, you get 1 year of webinars every Monday through Friday from 9 till 10:30 with my best live picks. Frequently, I'm trading alongside with P&L Proof, my Fidelity account I show. And you also get a 15-hour worth of video trade mastery downloadable course. It's one of my best sellers. Normally goes for $4.97. Lots of people ordered at that price, but that's included in your $9.97. And you also get a 30-minute personal phone call with me. And we'll schedule that at a time that's mutually convenient. Anytime, either November, December, or next year is fine. There's no rush, but you do get a credit for a half-hour phone call with me, personal, just you and me on the phone, plus the downloadable course and a whole year of webinars. So that's a spectacular value. And last time I offered it back in June, and so many people ordered, I held off on offering this deal again until October, because it took me a long time to handle all the support questions and all that. So it's a popular offer. It's a really good one. You have my word. It's very honest. It's very hardworking. Again, you're getting, daily webinars with me for a year. I'm a top money show speaker and a real money trader with Proof I Trade and the rest of it. So I hope you'll find good value in that. It's my goal to be of service and to help you turn the corner sooner rather than later. I don't do that with outlandish performance claims of making $100,000 a day or turning hundreds of dollars into $1 million or any of that kind of BS. And I don't upsell into overpriced courses or mastermind coaching groups or any of that kind of stuff. I make a great value proposition that's honest and it's hardworking, and I think it'll be worth your while. So I'm confident it will be. So anyway, do take advantage of that. We've got a few minutes left. Do we have any day trading chart patterns, day trade charts that anyone wants me to look at? Let's see, Apple. I don't like Apple because it's too expensive. I mean, I like the company and agree with Kramer. Own the stock, don't trade the stock. I know there's plenty of Apple day traders, but see the range. It's all about range and leverage. Now, what you do not want to ever trade is low float, under $10 pop and drop junk stocks, as they get halted all the time, especially if they're low volume. You've got these dishonest people in chat rooms that front run their members, and so you don't want to trade the cheap stocks that are too cheap and thinly traded, because that's the horrible charts. But you also don't want to trade the blue chip investment stocks because the range isn't good. So you want something in between, which is why I like things like AMC or Carnival Cruise Lines, things that may have a $1 or $2 or $3 range, and it's still affordably priced down in the lower part. So the range is not, the numbers aren't good. You'd have to put a lot of money into a buy over, side buy right over 140, sell at 142. but I'd rather trade a $30 stock with a $2 range than a $140 stock. So it's tradable, but the leverage isn't too good. Let's see, interactive IGP and ARIP. Let's take a look. We're almost at a wrap here. Let's see, IGT. Yeah, that's tradable. That's fine. Volume's a little thin. I prefer at least 15,000 shares a minute, but the pattern is fine. The range is okay. So yeah, it's okay. It's okay. It's not, I'd give it a B minus, but it's tradable. It fits criteria. Wow, we got a lot of charts. Okay. I only got a few minutes and I got to wrap up. I'm working on the Day Trading University site. Volume's too thin. But remember, ask about it only if it has 15,000 shares or more average volume. So the pattern is okay. The range is okay. That's my favorite pattern, is a small gap that continues. So that's a good range and a good pattern setup, but the volume's a little light. So, and who can tell me the problem with trading things with light volume? Usually it's the spreads are relatively wide. I mean, look at the tape. You can see spreads are kind of wide. So that's not good. Let's see what else. DBA, CPER. DBA. Nope, way too light. Again, only ask if it has 15,000 shares per minute or higher average volume. Let's see, CPER. So that's a horrible chart. Or at least it's not one that I would personally trade. No, just say no. US Steel. Now that one I frequently have traded. It's tradable. It's not a good setup now though, because metals are down. So oil is up, metals are down a bit. So I do trade X, and but not recently because it doesn't have an uptrending chart. Let's see, trying to read this ITT. And thanks to Wendy, Polly, Jacob, William, Pedro, Dan, Bill for the charts. No, the volume's too thin. Remember, it must have 15,000 shares a minute or higher volume. If you're going to make it as a day trader, you're definitely going to, well, I would say definitely, but very likely going to lose your shirt if you trade thinly traded instruments, because all it takes is one player to drop the price like a brick. You want something that has continuity to it. For example, here's, just so you guys know, this is my current watch list of things that we like to cover. Like Pfizer, GoGo have been good, Uber, right? Uber is good on yesterday, right? That's tradable. I have to remind live room members, remind me to cover Uber on Monday, okay? BT, that's got range and volume. OxyPete, an oil play. That's the kind of chart I like to day trade, OXY. So if you're not making it, if you're not being as successful as you'd like as a trader, you have to know what kind of landmines to avoid, or the pitfalls and traps and bad charts to avoid, and which ones actually make sense to trade. I like nice, clean, tight charts with high volume breakouts like this guy, right? It ran from 30 up to 31. And again, this is a good example. I'll wrap with this. And I just noticed this just on the top of my head. My favorite strategy is to buy right above a whole number and then sell right into the nearest whole number. You may have seen my stocks and commodities article on the topic featuring Twitter from a couple of years ago. You know, you see I would typically issue a buy alert at 30.2 or so and have it sell at 30.8 or 30.9. So trading within whole number ranges is a very valuable strategy that you learn exclusively with me, a real money trader. I've traded millions and millions of dollars, as much as 4.9 million worth in a single year worth of order flow. I didn't make that much profit, but I traded almost $5 million worth of instruments, that much flow in a single year. So I'm a very active trader with a lot of real money trade experience. So do join the live room, and I will see you guys come Monday, and wanted to wish you the best for an outstanding, safe, and peaceful weekend. So trade smart, trade often, make sure you're doing the right things, and I will see you guys next time. Thanks so much for being here, and take care. Goodbye. And thanks for all the kind words too. Appreciate it. You're welcome. Thanks. Oh, another big epic turnout. Echo, stop. But you folks just get your weekend started. So I'll see you guys hopefully Monday in the live room. Until then, take care, trade carefully, trade honestly, trade professionally, trade the right instruments with the right risk management and position sizing, and let's go get them. All right.